The Detailed Expenditure Report is often referred to as the DER. As you begin preparing this report, your scope items and your project cost will come directly from the list of project costs that were submitted with your application. Then you will list individual invoices here. Column A are your total expenditures for this recording period. Column B are total expenditures to date. And again, you have your cost estimates that were submitted with your application, and the percentage complete is the percentage that the element is complete. It is not a ratio of expenditures to cost estimate. It is actually a percentage of completion of that particular element. Should you find that you have exceeded your cost estimates, as in this example, we have $62,000 of expenditures to date on site prep, yet only $50,000 was budgeted. You have a couple of options. If you exceed more than 10% of your cost estimates, you can either submit revised cost estimates, or we can cap your reimbursement to the cost estimate that was submitted with the original application until the project is complete. Or you can charge some of that overage to contingency if contingency was built into your budget. And just a reminder, not more than 90% of the PARTF grant amount will be reimbursed until the project is complete. Let's talk about AIAs. The American Institute of Architects contracted document. Note the rate of retainage is withheld as indicated on the front page of the AIA. Here, as in most cases, it is 5%. We will come back to that shortly. I'm going to show you 3 ways to document AIA pay application information on your DER. This is an example of a continuation sheet provided with the AIA. You can highlight any expenditures associated with the specific scope item, which then is noted on the top or side with the 2 line items added up to show the total that applied to that particular scope item. Here's another page from the same AIA, and you'll see that an expenditure has been highlighted and noted that this expenditure should be applied to the gravel parking and drive scope item, and the total is listed here. Those numbers are then transferred to the DER, and you'll see we list the invoice number as the pay app number, the date, and the total amount that was added up and totaled for each of the scope items. This is the first request, so in this case, column A and column B will always match because there have not been any previous expenditures applied to any of the scope items if it is your first request. Now, this is a second way to show your detailed information on the DER, and this is the most preferred method. You would want to pick a different color highlighter for each scope item. In this case, we use blue to highlight all costs associated with site prep, green for all costs associated with playground, and yellow for the trail expenditures. So those would each be highlighted, and each of the costs for this period added up and noted at the bottom to show the total of this period for this particular scope item. And then again, these are all going to be transferred to your DER. And you'll see we have applied the totals on the report. The third way to note your expenditures from a pay app is sometimes people like to label their scope items by either 1, 2, 3, or by letters, as in this case with B, C, D, and E. Then you'll see on their DER, they have labeled each scope item A, B, C, and D, and E. And basically it's handled in the same way as the previous examples. The totals from the continuation sheet are transferred to the appropriate scope item on the DER. I mentioned earlier about retainage that is withheld on AIAs. Here you'll see an example, an excerpt from the original page that I showed you. Your contractor should be able to tell you the percentage of retainage that is held until the project is complete, or reference the first page and it'll tell you what percentage is withheld. Now this will not apply to final AIAs, because generally the final AIA includes all of the retainage that had previously been withheld throughout the project. So in this case, you have your expenditures for the playground. We know that retainage is 5%, so you just have to do a little math, and you'll want to deduct 5% for retainage as it is shown here. The next thing we'll talk about is sales tax. Sales tax is pretty easily identified when you're working with a general invoice. You'll see your items listed, a subtotal, sales tax, and then the grand total. In this case, you only want to use the subtotal figure to go on your DER, since PARTF does not reimburse for sales tax. Now, if you are working with an AIA, most of the time there are sales tax and use reports that come with your pay application. Your contractor should be able to tell you the taxes on which scope item they apply to. In this case, it's pretty easy to recognize because of the vendor name, so we can know which scope item to apply to. If you do not know, or if it applies to multiple items, you can just remove the tax from your totals and not necessarily from each scope item line. It is rare, but on occasion you do see a line for sales tax in the continuation sheets, but that is very unusual. Usually you'll only see it on those sales tax and use reports. If you know which specific scope item the tax applies to, you'll want to show it on the DER and remove it in the same fashion as we did retainage. So you'll have your pay app amount minus the retainage minus the sales tax to give you the total for this project period. This is a gold star example received from one of our municipalities. Though not required, the finance officer also provided their checks as proof of payment for their development project. On each check stub, she provided incredible detail. First, she identified the scope item. Then she gave the amount that was billed. The third column, less the retainage, gave the check amount. Following, she noted any sales tax applicable to each scope item. After removing that, she shows a subtotal submitted to PARTF for reimbursement. Documents that must accompany your land acquisition reimbursement request are noted in the manual on pages 7 and 31 through 38. Appraisals must use the Uniform Standards of Professional Appraisal Practice method. If the land you acquire is valued at $500,000 or higher, 2 appraisals are required. Each property acquired with PARTF funds will be required to have a notice of restriction applied to the deed. The exact language your real estate attorney should use for this notice can be found on pages 13 and 14 in the grant manual. Donated value is explained on page 8 in the grant manual. We will cover it in more detail shortly. Not all transactions generate a closing disclosure or settlement disclosure statement, formerly known as a HUD statement. This is not required, but if you have a closing disclosure statement from your transaction, please submit it with your reimbursement request. It clearly breaks down costs associated with the transaction. Every reimbursement request should include a reimbursement request form and the detailed expenditure report. If you have donated value, do not include this figure on your DER. Only actual expenses incurred go on the detailed expenditure report. If you have a combination project, complete the acquisition reimbursement request prior to submitting reimbursement requests for development, unless you submit them together. We must ensure site control before we can consider development cost. Now, let's look at some of the documents I have just referenced. Here's an example of a closing disclosure statement. You'll see contract sale price, also earnest money that was paid prior to closing. You will see that taxes are itemized out. And then here, your settlement charges. You'll find detail on the second page of the disclosure statement that will break down those charges. Then you'll simply transfer those numbers to your DER. Now, if you'll recall, this contract sale price on the disclosure statement was $400,710. However, at closing, only $390,710 was paid because $10,000 was paid prior, as noted by the invoice date on the DER. But those added together come up with the sale price that you saw on the closing disclosure statement. Also notice the $2,394.25 in taxes that were highlighted in blue on the disclosure statement are not included on the DER. This is because PARTF does not cover taxes. Donated value is present when property is donated or acquired at a bargain sale. Donated value is determined by the difference in the property value and the amount paid for the property. Should you have donated value, reimbursement is determined differently than the standard 50-50 ratio. If you have donated value, this is the form you will use. This is a new form and is not in the current grant manual, so you will need to request it from your RRS consultant. Once you've determined your donated value, you then can insert your total expenditures for this period, all taken from your DER, and apply it here to line A. You then would deduct the donated land value, which leaves this balance of expenditures. The donated value is reimbursed at 100%. The remaining expenditures will be reimbursed at the usual 50%. So you'll take the 100% of donated value plus 50% of the remaining expenditures to come up with your total request for this reimbursement. If your initial reimbursement request does not include enough incurred expenditures to match or exceed the donated value, it will look like this. Expenditures will be reimbursed at 100%, which in this case is $121,962.60. The remaining donated value, $77,327.40 will be carried forward and applied on the next reimbursement request once more expenses have been incurred. This is a little repetitious, but worth mentioning. Please maintain these items in your project file. In order to close your project, closing documentation must be received within 45 days of the project end date. Please reference this list and pages 9 and 20 in the grant manual. Once your project is considered closed, your obligation is not over. Post-completion inspections will be conducted at least every 5 years and must operate PARTF-assisted facilities to provide public recreation for 25 years. PARTF-assisted land acquisitions must be used in perpetuity for only public recreation purposes. Any modifications will need the Department of Natural and Cultural Resources approval. Should you anticipate modifications, please see pages 20 and 21 of the grant manual and contact your RRS consultant for guidance. We hope this video has been helpful and we wish you great success with your project.